Harvey Norman will repay $6 million in JobKeeper. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because Harvey Norman, everyone's favourite, well, one of the favourite electronic retailers, you know that their share price kind of tumbled at the beginning of this pandemic, but then they shot up. Everyone was going out with their stimmy money to buy their mobile phones, their new webcams, to start their new online careers, and they reaped a lot of rewards. Now they're paying back $6 million of their JobKeeper payments, everyone. So let's have a look at this article from Yahoo Finance. Harvey Norman repays $6 million in JobKeeper. Electronics and home goods retailer Harvey Norman has repaid more than $6 million in federal government JobKeeper wage subsidies following repeated lobbying. Really? You think the lobbying has to do with it, or the fact that it takes time to sort it out? The Jerry Harvey-led group in August returned to taxpayers all of the $6.02 million in wages and support collected since the coronavirus pandemic began in March last year. It had received $2.39 million in the 2019-20 and $3.63 million in 2021. All of the wages, support and assistance was repaid to the federal government via the Australian Taxation Office, the company said, as it released its full year results on Tuesday. See, that's the thing. It's not lobbying, it's when they release their results. Okay, come on. Let's have a look. Before we keep going, let's jump and look at the share price for Harvey Norman. We can see there it's at $5.38. Their dividend yield, a nice, what's that, $7? Let me just, 7%? Yes, 7.7% dividend yield. Not too bad at all. So, there you go. Looks like their shares, they're down a little bit today, but not really that much. Not over a year, everyone. Chairman, Mr. Harvey, had previously defended his decision to retain the funds despite repeated calls by unions and others that it be repaid, because he didn't have to repay it. That's the thing, everyone. This is how there were so many calls for this, roll this out, roll this out, roll this out. It's a bloody mess. What do you expect? They had argued the money was supposed to help struggling businesses get through COVID-19 crisis and retain their staff, and Harvey Norman was not viewed as struggling. Harvey Norman on Tuesday posted a solid lift in annual profits, with Mr. Harvey praising the group's ability to navigate the coronavirus pandemic. Net profits for 2020-2021 rose to $841 million, including outlet property valuations. That's where a lot of the money is. I was talking to a gentleman, what was it, Super Amart, I think he owned that, and he said the money's all in the real estate. That's where you make the money. And he also mentioned that they'd do an advertising campaign with all the pamphlets and stuff, and then boom, their stores would just get flooded. So it was 75% from the previous financial year. Remember, guys, our first recession in 28 years. We're potentially looking at another recession, a double-dip recession, and we're just hearing about profits. But then, how the mum and dad business is going. Excluding valuation, the result was $743 million, up 63%. Not bad. System sales, including group-owned and franchisee outlets, totaled almost $10 billion. The solid results delivered is a testament to the strength and resilience of the group and its ability to adapt and transition to the challenging retail landscape and continue to navigate the uncertainties presented by COVID-19, Mr. Harvey said. Customers continue to engage strongly with our brands. Mr. Harvey said state and territory lockdowns in Australia had impacted the group's sales in the first 2 months of 2021 and 2022 financial year. However, we expect spending to recover quickly, as we saw when lockdown restrictions were eased in our overseas markets due to pent-up demand, he said. Shareholders will be paid a final dividend of 15 cents per share, taking the total payout for the year to 35 cents, which is up from 24 cents in 2019-20. The shares were down 3% to $5.39 at 11:11 in the morning. So what's the market sentiment? How are people feeling about this? Sure, the shares are down a little bit, but let's have a look at the market sentiment. I'm just going to jump back here to that. There we go. Now, we have a look. This is from the SelfWealth brokerage that I use. I plug them at the end of every video, and I like, you can get all this little information, insight from their community. So it's only from the people who are using their platform, but I think it would give us a decent insight. So who's buying and selling? So the top 10 to 30% they're selling, while the top 1% are buying, top 40% are buying, bottom 50% are buying, and the bottom 30 and 20% are buying, where everyone else is selling as well. It's ranked 166th by ownership, 215th by weight, and 79th by the company market cap. And the reason people are buying, a good dividend-paying stock. The second reason, it's undervalued and the company's earnings potential looks good. The reason they're selling, 43.6% are taking their profits. Had a better investment idea or opportunity at 16%, moving into a different sector at 8.9%, and aligning with the target portfolio. Now the recommendations, target price is $5.97. We can see here recommendations leaning towards the buy with community sentiment, which is bullish. And I could even vote this. I haven't bought any. I don't own any shares. So that just shows you what it is. It's this community snippet. And I'm showing it here to give you some insight and because I use their platform. So what is the solution or the takeaway to this? Do you think it's a good move for Harvey Norman to repay that money? Well, let's have a look. Marketing-wise, $6 million. Do you think it'll help their brand? Do you think not paying the money back would have been a smarter move? I mean, we're talking, look at their revenue. $6 million isn't going to make a significant dent with the amount of profits they're making. I think it would look bad if they'd announced an increased dividend and they'd kept $6 million JobKeeper, even though they could. Could you just imagine? The people complaining? Probably a fully franked dividend from JobKeeper going to the retired as fully franked dividends. Oh, shit. Yeah, I can see it now. I don't know if that would have... Yeah, it's probably a very smart move that they paid that back because the optics would have been terrible. It would have been damn funny, really funny to see. I almost wish they hadn't done it just to see it. What do you think? So, I mean, there's the solution to this is to do what Harvey Norman did. Pay back the money. Makes sense, guys. Because otherwise it really would be dividends going to the retired. Just that'd be it. JobKeeper paying for the retirees' dividends. That'd go down well here in Australia. As always, guys, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy a merch from HeiseSays. You can see the 2 pocket squares there, and I'm wearing one here. I probably need to go to Harvey Norman to get a camera with a bigger view. That's any excuse I can find to buy a new toy. Or you can support us using Gold Pass from the Perth Mint or via PayPal. Take care, guys. Have a great day. I'll see you all next time. Bye for now.